Good evening, Midlands African Chamber. Welcome to another edition, our last edition of 2023 of the Power Hour, brought to you by our strong champion supporter, Wells Fargo Bank. We appreciate you for joining us tonight. Our last but not least, we are here tonight to talk about ethical accounting. But before we begin, as always is the case, let's go over the highlights of the things coming up in the chamber for you to get involved in the new year. First and foremost, for all those who have who participated and are ready to graduate the MAC Accelerator Program, that graduation is happening Friday on January 12th between 5 and 7 p.m. If you have not had the opportunity, if you are an entrepreneur and you are looking for opportunity to get connected with the chamber in regarding Pitch Black or Accelerator Program, you do not want to miss those who've gone through before you. You want to see what they've done. You want to get the exposure. You want to know exactly how MAC can help you grow and scale your business. That is what the chamber is here for. That is what the chamber is existence, its purpose is for, is to help you grow and scale. So don't miss that graduation, January 12th. January 27th is our final day. MAC is bringing back with the foundation, the Suit Up program, to help our youth and those who are underprivileged with items, jackets, suits, coats, blouses, anything that you can donate. This is an opportunity so that you can give to your community, clean out your closet, especially after Christmas. You know you're going to get some things you don't like. So that's an opportunity for you to go ahead and donate that to people who are in need and can help build the next CEO. January 24th, we have our roll call event. That's going to be held at Modus. Roll call is an event that you also don't want to miss. Roll call is an opportunity for you to network with other entrepreneurs just like yourself. Roll call is an opportunity for the connection part of what MAC does in us connecting our members together with each other so we can grow and scale each other as opposed to going to somebody else and asking for handouts. Last but not least, on February 8th, there will be a Trade Partners Connect with Turner Construction. If you missed the last Power Hour, I implore you to go back and listen to that Power Hour. It was very impactful coming from a industry lead in the world for construction, but more importantly, it's a matter of building and building partnerships with trade partners such as yourselves. So if you are anywhere close to having a business or even in the mindset of seeing what a trade partner such as Turner Construction has opportunities for, you don't want to miss that opportunity. So without any further ado, I'm going to invite our two wonderful guest speakers tonight to the stage from Bland Associates. First and foremost, we have Matt Fowler, a capture lead with Bland Associates. Matt, thank you for joining us. I do believe I'm going to go ahead and unmute you. Well, you got to unmute yourself. There you go. Hey, welcome to the Power Hour.
Oh, thanks, Shay. Thanks for having me.
Well, Matt, before we begin into the depths and scopes of ethical accounting, what is Bland Associates?
Good question, Shay. We're a local Omaha accounting firm. We have your traditional lines of business, tax, as well as auditing. And then about 50% of our revenue comes from government consulting, where our main client out there is the Centers for Medicare and Medicaid Services, and we conduct fraud, waste, and abuse audits for that agency.
Okay. And what exactly is it that you do with Bland?
So my responsibilities at Bland consist of finding out what agencies are going to be releasing certain requests for proposals that match our capabilities. Once we kind of look to see within an agency, try to make contact, maybe even try to do a sole source bid with them based upon our capabilities, guide them in that direction. If we have any gaps within our capabilities, I'll reach out to other companies to see if they want to join our potential proposal to pursue that opportunity.
Okay. And how long has Bland Associates been around? I'm curious because I mean you say you're small, but it doesn't seem like you're very small.
We were founded back in 1976, if I do believe that number is correct. DeVon's going to have to check me on that when he gets on. But we've been doing, the government consulting line of business since around early 90s. And to be considered small for the opportunities that we go after, you have to be around lower than 16 million in revenue a year.
Okay. So he says small, less than 16 million. Well, I see you. I see you there. I see you there. So how is Bland Associates connected with the chamber?
A good question. Good question. So we've been trying to increase the diversity within our beloved accounting field for several years now. We started a diversity, equity, and inclusion committee, which DeVon and I both serve on. And that led us to really realize that we don't have the candidate pool that we want to in order to increase our diversity. So we set about how can we make this happen? So we decided to try to issue some scholarships to local BIPOC students. And we could not find an avenue to make that happen. We'd been in talks with several different companies, and it was a 3-year journey for us, where finally, through a chance meeting at Big Mama's Kitchen, where we went to go listen to Kareen, the MAC CEO, speak on minority small business owners, small businesses challenges. After meeting with her with one time, she took the reins and made our dream happen. We were able to actually issue this fall 10 $1,000 scholarships through the MAC Scholarship Committee. DeVon and I had the opportunity to serve on there. It was one of the best experiences that I've had in my professional career. Some of the students couldn't make it when we issued these scholarships out, so I got the chance to meet some of their grandparents and to see the look on the grandparents' faces when we awarded these. It was fun. It was really, really awesome.
And so just so I heard this correct, Bland Associates sponsored 10 $1,000 scholarships just this fall.
Well, we can't take credit for all 10. We were involved in it. We could take credit for 4 of those. And then the MAC went out and got 6 other partners to help out with that. So, but I feel like we are integral in making that happen. And we strongly believe in the MAC's mission, which kind of leads us to think of how else we can support it and why we're kind of talking tonight on this Power Hour.
So for those that you don't know, then it comes into matter of the best way for those who are minority or disadvantaged to get into the field of accounting would be to utilize some of these resources that are out there, such as applying for scholarships.
Yes, sir. Yes, sir. And because I mean, we had at first we had only a few applicants. We had to circle the wagons, contact some of the schools and say, hey, do you know of people, and try to get more people to apply. In the end, we got, I think, about 30 to 40 scholarship applicants in there. And it was tough deciding which ones to go with. I mean, some of these kids are actively involved in the community, not only have great GPAs, but they made my resume look poor, and I'm 20 years into it,
Well, we're not going to talk about resumes because mine. So what else has Bland and Mac have been collaborating on?
So the other thing that we've been involved in is the We Pitch Black event for fostering entrepreneurship. We helped set that up this year, and we will continue to do that. It's a great way for entrepreneurs to really develop their idea that they might have and they want to bring forth to the world, and earn some funds to go out there and pursue it. Sharpening your message and have basically free feedback that'll come their way.
And I think this goes back into, I mean, we're ending 2023, but simply because we're ending doesn't mean that 2024, we're approaching 2024, the plan, and that plan is to grow and scale businesses. And so your integral involvement in Pitch Black, have you seen the benefits of that work?
Good question. So even before we involved ourselves with the MAC, I actually had an opportunity to eat at Okra, one of my favorite restaurants in town. It came through a soccer buddy as a recommendation. We went out there to eat, and oh my goodness, I don't think I'd ever had real ginger beer before. That ginger beer was amazing. The J-Loaf rice was amazing as well. So that actually I came to find out after my involvement with MAC. They were the We Pitch Black event winners. Shoot, I want to say back in 2021 or 2022. I can't remember. Okay.
It was our second. It was actually, it was our second year of Pitch Black that Okra Grill won. Because one of the things that you got to know about the chamber is there's no short of good chefs. No short of good chefs in the chamber. The people in the chamber, we like to eat, and connecting with people who like to cook. I mean, that's a win-win.
Yeah. So it was awesome to be able to put like an event like the Pitch Black event into seeing something in a building stand up in a restaurant that's been now in business for coming up on 3 years. So
yeah.
Great.
Yeah, absolutely. Well, anything else I'm leaving out, Matt, that we want to go ahead and talk about?
No, I think that sums it up, other than, DeVon's coming up next. He's the brains of the operation. I'm obviously the beauty. So, but I know you guys are going to want to stay to listen to him speak. He is knowledgeable of all inner workings of the tax side of the business when it comes to small businesses.
And speaking of the most miserable part of being an entrepreneur, it's about taxes. Let's bring to the stage DeVon Billups, my friend. Thank you for. There we go. Hey.
See, I was gonna go for like a sitcom entrance, like look over here, and then hi.
Welcome to the Power Hour, my friend.
Thanks. Thank you for having me. Happy to be here.
And so, in approaching 2024, I mean, the news it's always cyclical about, you're like, hey, how do you reduce your tax liabilities before the end of the year, and all these tidbits. But we're going to get it from you first and foremost about how to do it ethically.
Yeah, absolutely. And I think, the bulk of my presentation is, about preparing yourself, right? Because unethical things happen when you're kind of rushing or you're putting yourself in not the best position to succeed, or you don't have a plan, you don't have a strategy, right? And so if you're proactive, you can get ahead of things and use ethical strategies rather than some of the more unsavory areas that you might see on social media, like TikTok, Facebook, things like that, of suggestions that people might get.
You mean I just can't put that money that person gave me in cash in my pocket and go home?
You can, but Uncle Sam wants his cut. So if he finds out, good luck. You as an attorney, Uncle Sam's coming.
Oh, 100%. And for those that you don't know, Uncle Sam will come and criminalize. That has nothing to play with. Nothing to play with. They play to win.
Mm-hmm. Yep, and they don't like to lose.
They don't. So prepare for tax season. Let's get started.
Yeah, absolutely. So a little bit about myself. My name is DeVon Billups. I am a fully licensed CPA here in Omaha, Nebraska. Been working with Bland since I was a junior in high school back in 2011. And then I, obviously graduated high school, started my undergrad at University of Omaha, and joined the tax team in 2014-ish. Kind of fell in love with accounting just in general. I was originally going to be pre-med, and then someone was like, yeah, but you're going to have to do, 6 more years of school. And I was like, that's a good point. I'll be an accountant. So became, started as a intern, staff, supervisor, and now I'm currently a tax manager, which, really just comes down to managing people, right? In terms of helping people learn from the experiences that I've learned from, passing on the knowledge that I've gained in my many years of dealing with clients and and tax laws and taxes have become significantly more complicated, even as someone who's relatively new to the field compared to my other counterparts who have been doing it 15, 20 years. In my career, from where I started to where it is now, it's significantly more complicated. So hopefully this helps establish that I am someone who knows what I'm talking about, that I've lived and breathed this for a number of years. And so hopefully I can pass that knowledge on to you guys, and it can pay dividends in some way.
We're certainly about to find out.
Yeah. So a quick agenda, like I said, we're going to talk about due dates, record keeping, scams that are out there to be aware of, because that kind of goes back to that unethical part where sometimes the sticker price is too good to be true. When someone says, hey, we can get you this much and all you have to pay is this much, that math sometimes doesn't be mathing. So you have to be able to know when things are a little too good to be true, as well as some high-level tax strategies to be aware of. Obviously, everyone's situation is different. Everyone's business is different. So if you're looking for personalized tax strategies and advice, definitely reach out to a professional to kind of inform them of your situation, because a lot of it is context-based. You need to know a lot of different facts and circumstances in order to make a good strategy that will actually work and that is ethical and above board, as well as a quick to-do list for things to do as we're closing out 2023, heading into 2024. So this next slide, excuse me, the next couple of slides are going to be wordy, but don't worry, I'll help you navigate through it. This is more so for people if the slides get disseminated, it's all right there for everyone to know and have it. Even if you wanted to print these out and put them on your wall, I wouldn't recommend that because that's depressing. But the first due date is December 31st, obviously the end of the year. Well, no duh. It's when everything kind of comes to a close. But it's a great time to emphasize that this is the last time where you can kind of get those expenses to apply to the current tax year. So you're talking donating to charity, you're talking buying that vehicle for your business, things like that. You want to get that all done before the end of the year. That way you can write off that stuff in the 2023 tax return.
So if I understand you correctly, you got about 10 days to make any sort of major purchases. Is that what I heard?
Yeah, so I mean, I wouldn't try splurging for that Bentley for that business vehicle, but you could probably get a Honda Civic in that time frame.
So operationally speaking, and this kind of goes back into, I think without skipping ahead,
yeah,
if you know where you are income wise and you're looking for opportunities to reduce your taxes, December 31st, so long as you are on a calendar basis, correct?
Correct. If you're fiscal year, then it's a whole another can of worms.
Yeah. But this is the opportunity for you to then go ahead and make that purchase so that it can be reduced off your overall income.
Yep, absolutely.
Okay, you heard it here, folks. 10 days.
Yeah.
Don't miss it.
Yeah, don't miss it. Next one, and we'll kind of breeze through some of these. January 15th is a due date for fourth quarter tax estimates. So this is if a part of your strategy is prepaying your taxes for the year, this is the last opportunity to make a payment to the IRS or the state of Nebraska, whoever you have to pay taxes to, and it be applied to 2023. So if you make that payment January 17th, 2024, the IRS is going to apply it to 2024. And then when you file your taxes, they're going to say, give us more money. We applied that over here, but so now you owe us more. So that's always something to be aware of if that is a part of your strategy or if that is something that your accountant has advised you to do. Next one is really kind of getting into that business owner type situation where you are having payroll. If you have payroll, if you have employees that you pay through payroll like ADP, Gusto, QuickBooks, something like that. That is a due date to be aware of because you do not want to file late because then you're getting into issues with not only the IRS but the Social Security Administration. And if you think the IRS doesn't play, Social Security does not play when it comes to getting documents mailed on time. So always something to be aware of. And then as well as some other miscellaneous documents that maybe you as the business owner are going to be receiving from, if you have an investment account with like Fidelity or TD Ameritrade, you'll get a document around that time. Or if you have a mortgage, if you have a bunch of rental properties, that's when those forms will start rolling in. February, it's just more forms. More forms are coming in. This is something to be aware of when you check your mail. Check your mail daily. Don't throw anything out. They don't do a great job of marking stuff, but obviously if they mark stuff, then people come and steal your mail. So it's something to be aware of, and save up those forms for your accountant. So now we get into our first, big boy deadline, right? March 15th is the deadline for all partnership, and we'll talk about what these are and how to know what you are. Partnerships and 1120S corporate tax returns, as well as an extension, right? And you've probably heard about extensions. There's a lot of misinformation about what an extension is, and a lot of conceptions that it's bad, and it's not a bad thing. We'll talk about that. But then as well as a due date for all business income taxes paid at the entity level, which we'll talk about later when we get into some tax saving strategies. But so basically a 1065 partnership is what it sounds like. It's a partnership. And so if you and a buddy, you and a family member have a mutual business that you guys are both operating in, you're probably a 1065 partnership. If you are an S Corp, it's a lot easier to know because there's legal paperwork that has to happen to get to that point. So if you don't think that you are, then you're more than likely not. But it's always best to just look at your last year's tax return. The form number is in the top right-hand corner, and you'll be able to know exactly where you stand. And so that way you can know, does this due date apply to me? Does it not? And then that way you don't have to worry about it. And to the extension point, a lot of people fear that filing an extension is going to get them in trouble, right? The IRS, it's after the due date, the IRS is going to keep a watchful eye on me now that I've had to file an extension. That is 100% not the case. You as a American citizen or resident alien, whatever your case is, that you're filing a tax return, you are entitled to the 6-month extension that comes with both these flow-through entities like a partnership or a corporation, or your personal, right? So if you don't have your things together, if there's a fire and now you've lost a lot of your records, there are these extensions that are out there that you can either file yourself or you can have your accountant file on your behalf to give you that extra time. And we'll see those extended due dates pushing it from the spring all the way back to the fall. And so highly recommend people take advantage of those, especially when it comes time to gather things and you're living your life, you're running your business, and now you have to play your accountant. You have to put your accountant hat on as well to get your stuff together. So it can all be a little much. So take advantage of extensions.
Is there any downside to an extension?
No, not really. When unless your downside is kicking the can down the road. It doesn't necessarily change processes. It doesn't change your good standing. It doesn't really impact much. The only downside that I could see is if you are doing things that are outside of accounting, right? So one common thing is someone is buying a house and their mortgage broker requests a copy of their most recent tax return, right? But it's not filed yet because it's on extension. That's one thing I see. But if you provide them with a copy of the extension, then they're usually fine, and you can go about your business. So
just so we're clear, so long as you're not kicking the can down the way, right? Meaning you don't owe.
Yep, you don't owe. So okay. If you do owe, however, let's say you're historically known to owe and you plan to owe, then that due date is basically, it gets kind of weird, but basically that due date is the payment due date. Even if your return's not done and you don't exactly know how much you owe, the IRS wants you to pay something, right? But if you're a person who historically gets refunds and you have no reason to worry about owing, then then it's nothing. There's nothing to worry about, and it just kind of goes forward. Great questions. Keep them coming. Keep them coming.
Hey,
keeping me on my feet.
I'm more worried about me, man.
Yeah, when I see you start writing stuff down, I know what's up. April 15th, the second big deadline. As you can see, there's these tax returns, 1120 corporate, which is different than an 1120S, which is why it has a separate due date. 1040 individual tax returns. Those are the tax returns that we as individuals file. So this is where you're claiming your kids, where you're putting a lot of your charity and your home mortgage, all of that stuff that you see kind of when those documents come in. That's where that's getting reported. And then 1041, that's really for people who have maybe like a trust set up for their kids or an estate type deal. Small percentages of the population has that, but figured it was worth noting. And then your due date for if you want to start prepaying your 2024 taxes, that is due on April 15th. June, payment of your second quarterly one. So now here comes the September and October. So this is, a lot of times what I see is that, people extend in March, April, and then wait until September. And then they're like, oh, now the tax man's coming for what I owe him. Don't do that. It's always, even if you extend, start working on things in the summer, right, where things are slower for accountants, and you can have that more one-on-one time, just to get your ducks in a row. That way, when it comes September, October 15th, you're good. You don't have a pressure of a deadline hanging over you. And so the point I want to make for September and October 15th is that these are it, right? Like, there's no more extensions after this. So it's make or break. You have to file by then. If you don't, then now it's considered late.
And what happens if it's late?
Then you get a penalty called a late or non-filer penalty, which is 25% of the amount owed, and it accrues, and that it's not 25% per month, but it accrues the longer it goes unfiled. They just keep tacking on more and more interest and penalties onto that, because now you're getting, right. Let's say you filed late and you owed money, right? Now you're getting hit with the non-filer penalty and the late payment penalty, and you're getting charged interest on all of that.
So
it's very expensive.
Yes, is that if you owe, you need to file, and you need to file on time and pay your taxes.
Yep, and that's where the ethics comes in, right? Of you have that threat of these penalties and this interest and this tax due all combined together, and that's where you can start getting. I think in accounting there is something called the fraud triangle, right? And it's an ethical concept where there's opportunity, means, and something else. But basically, if you have two of these circumstances, that's what pushes you into doing unethical things. So the pressure of having a large tax bill with interest and penalties may make people want to do something that is out of character for them and rationalize it. And so that is why you want to be aware of these due dates. That way you're never putting yourself in that position as a business owner, and you can operate the way that you need to. And so all of these due dates, even if you don't want to, listen to this recording, I assume we're possibly recording or going to be distributing out information. If you don't want to listen to it on repeat, these due dates are available on tax.gov/calendar. Bookmark it, print it out, whatever you need to do that you have access to it. And the last thing when it comes to due dates is if you do have to mail something, have tracking on it, right? Because the IRS will say they never received it. If you mail it the due date of, they'll say they got it late. And so the rules are, and this is called, this is formally called the mailbox rule. It's not called that anymore. But so the rule is if you mail something by the due date, it is considered filed on time, right? So you could be at the post office at 11:59 p.m. on the due date, and as long as you hand that over and have tracking on it, then it's considered as if the IRS received it at that time, right? So it's something to be aware of, and it's a provision that people don't know. And when the IRS says, "Hey, you filed late because you mailed your check on the due date and we didn't receive it till this date, we're going to penalize you," you can fall back on that and say, "No, there's this over here." All right.
And just to be clear, you did say not just postmarked, but with tracking.
Yes.
Oh,
and the tracking provides you with protection, right? Of when the IRS says, "Hey, you didn't, it's late," and you're saying, "No, I have the receipts of when it got mailed, when it was handed over to the United States Postal Service or UPS, FedEx, whoever it is." So that offers you proof of when you have to have that conversation with the IRS and to get those penalties removed, because they can be removed. You just have to know how to structure your argument or have proof that they should be removed. All right. So this one's really quick, just kind of giving you an inside look on how a public accounting firm works, specifically on the tax team. January through April, it's tax season. That's what we're doing 90% of the time. Then May and August is when things slow down because obviously everything's been extended. And that's a great opportunity. If you as a business owner are looking for some consulting, that is the perfect window to get in with your accountant, go to lunch, have to set up a meeting to talk about kind of how your year is going, because they'll have way more time than in April or January through April and September through October. So, and that's also when vacations happen. So if you email your accountant and you find out they're out of the office for the next 3 weeks, that's why. September, October, like I said, it's an extension season. So obviously everything all or nothing, those returns need to get filed. So obviously we're kind of hunkering down for that as well. And then November through December is tax planning, tax projections. That's where accountants make a lot of their bread and butter of advising their clients to buy that vehicle, to buy that piece of equipment, before 10 days left, right? We're talking about this stuff in October and November where they have a month or so to plan for these things.
So note it to self. Don't wait to the last minute to make these large purchases, and you'll kind of pre-plan for it, prepare for it. Is that what I'm hearing?
Oh yeah, preparation is the key to success when it comes to accounting and just life in general, right? If you know what your due dates are and you plan for them, you're never going to fail. All right, so now we can get into kind of record keeping. This is what I get asked a lot, and I think this is where kind of the unethical aspects start to kind of trickle in, right? Because you don't know what's deductible versus what's non-deductible. Where do I put this? Do I need to keep this? Do I not? So I guess the first question I would recommend business owners ask going into 2024 is, are your financials up to date, right? For people who maybe do their own bookkeeping, because business owners, they maybe don't have an employee that specifically does this there, or maybe their significant other does it for them. This is where you will want to, this time of year, I mean, obviously it's the holidays, you want to spend time with your family, but before it gets to February and your accountant's asking for your financials or your books or your receipts and stuff like that, you want to make sure you have those up in a row through the end of November. That way, when you get into 2024, all you have to worry about is December rather than the full entire year. Things like, has your checkbook been balanced? Have your credit cards and out-of-pocket expenses been accounted for? And if they haven't, definitely spend the time, put in the effort to get those up to date. Do you have a copy of the last few years of your tax returns readily available, right? Like if I asked you for your tax return, how long would it take you to go grab that and send it to me? And this is a good thing if a person's buying a home or doing some large project that requires, financing. And because your accountant might not be available or reachable in January through April because they're just so busy, your email gets lost in the shuffle. So making sure, you have those just in case you are planning on buying a home during that time period. That way you have them and you can send them right off. And if you're planning on leaving your current accountant, Shay, you drop my contact information, but your new accountant should request the last few years of your tax returns because we're human, we make mistakes. And so being able to look over those, one, it gets the accountant to know kind of what kind of business you're in and what kind of things you do, but also to point out mistakes, things that maybe the prior accountant messed up on. So it's just always good to have copies of your returns. And then lastly, do you have full unrestricted access to your bank and credit cards? That comes back down to, if I asked you for a specific item, could you go up and get it? Or do you have to, is the password expired? Now you have to go reset it. Oh, I don't have access to this email anymore. Like the process becomes a lot more stressful, like we said, when you're not prepared for it. So as long as you're prepared for it, then it becomes a relatively simple, easy process to deal with in terms of tax season. Keep pushing on. Do you need a software like QuickBooks? Answer is no. A lot of small business owners can get by with just a very well-made spreadsheet when you're talking, date, amount, vendor name, category, notes, right? Like me as an accountant, that's all I need. I can see that in January of 2023, you spent $200 at Walmart for office supplies. Boom. I know exactly where that goes. I know all the information that I need to know. Do I need the receipt? No. Should you keep the receipt? Yes. And that just comes down to a record retention process or procedure that the IRS has out there. But obviously everything's electronic now. So, credit card statements, all of that stuff, it should be hopefully available. So it takes a little bit of the burden off of you. So you don't have to have a shoebox filled with everything, but.
Hey, stop picking on my shoebox.
I'm pretty sure it's a nice shoebox,
It is, man. I got my J's on right now. It's a big size 14 shoebox, but
I had a client drop off his receipts in a Jordan box, and I was like, okay, I have new respect for you now. Okay.
Yeah. It's all there. You just gotta find it.
Do you need a bookkeeping accountant? And so the difference between a bookkeeping accountant and a tax accountant is that I specialize in tax preparation, right? I know how to reconcile a bank account and things like that, but that's not what I do on a day-to-day basis. It's going to take me a little more time to figure that out. But if you want someone who does your invoicing, pays your bills, things like that, that's what a bookkeeping accountant is for. And so in my personal opinion, small businesses don't need a bookkeeper, right? Or a bookkeeping accountant. It comes down to a time equation. How much time are you going to, or how much time do you want to spend doing those activities as a business owner? Or do you want to go outside if you're doing sales? Do you want to be meeting with customers, or do you want to sit back in the office, categorizing expenses and reconciling things?
DeVon, what is the difference between a bookkeeper and a bookkeeping accountant?
Nothing. So a bookkeeper is just the shortened name for a person who specializes in bookkeeping accounting.
So it kind of goes into a matter of understanding how many transactions one does in the course of a month or whatever period of time. And if you're doing, upwards of hundreds of transactions in a month, it might make more sense in order to categorize those expenses or, receipts to have somebody do that for you. If you're like me and just frugal.
You don't spend anything, therefore you don't need someone to categorize what you're spending on.
I categorize zero.
It's and technology is making it even easier, right? When you're talking about, like, for example, if you have QuickBooks Online, which will cost $30 a month, right? It has built-in tools where if you can link it to your bank account or your credit card, and then you can tell it, oh, this expense belongs in this category, and so it'll do it for you. So you can have some pretty sizable transactions, but because since all computer is doing all the work for you, it can definitely save business owners a lot of time. And so I definitely want to leave more time for Q&A. So I'm going to kind of breeze through a couple more points. Should you organize your things? Short answer is yes, you should, because I personally don't know where things go. If it's business, is it personal? If I see a $20,000 receipt to Tiffany's, I'm going to have a guess, but you never know. So,
of course, it's within the 10 days, DeVon. It's my write-off. Like, that's what we're looking for.
I needed this 16-karat diamond ring for business, okay?
Just saying.
Yeah. Scams. I want everyone to be aware of these things, specifically the first one, right? Because of the fact that this is something that a lot of people, I personally, as an accountant, I don't have a business, but I'm getting calls about how my business can save $16,000 per employee because of the employee retention tax credit, right? So the employee retention tax credit is a thing. It does exist, but it is closed. So if you get a call tomorrow that says, hey, you're eligible for this and you can apply for this, you can't. The IRS is shut it down because of fraudulent claims, right? We had a lot of these kind of pop-up shops that came out of nowhere that said, hey, you're eligible. And they didn't. And there's very specific rules for eligibility. And so I had to tell some clients that, no, don't listen to this person. You kind of sound like the bad guy, right? Of saying, this person said, I'm eligible for $50,000. And I'm like, no, you're not. Don't listen to them. They're like, okay, now you're sounding like you're suspicious. And it's like, no, I know what I'm talking about. So this is out there. It's not open anymore. So it probably will be, but the IRS is investigating those fraudulent claims to vet the people who did claim it when they probably shouldn't have. And that comes down to ethics again, right? Of you get this big dollar figure of I could get $100,000 back from the government. But if you're not eligible, then maybe you shouldn't receive that. And then tax preparation for a percentage of your refund. So this isn't as common as it used to be. But I've still seen this out there where basically someone says, hey, I'll prepare your tax return if you give me X percentage of your refund, right? So now that service isn't oriented to giving you the best results in terms of ethical reporting and correctness and making sure everything's accounted for. That's getting you the biggest refund possible. And if you want to get put on a watch list by the IRS, trying to get massive refunds with little income is definitely a way to get put on someone's list. And the only caveat is that this only applies to tax preparation. If you're going to tax court or you're undergoing an IRS audit, then accountants sometimes do say, okay, well, if I can save you X amount of dollars, I'll require a percentage of that. And that's kind of just how the industry operates.
So note to self, don't get on somebody's naughty list.
Yeah, no, you do not want to see your name on that list because bad things are sure to come. And we want 2024 to be the good one, right? We've had 2021, 2022, now 2023, 2024, it's the year. It's our year.
This is the year. This is it. Yes.
Yep. A term that's called ghost preparers, which is sadly a common thing, which is basically you go to someone to file your tax return and they don't put their name on it or they don't want to put their name on it or sign it, right? That should immediately be a red flag of being like, why don't you want to be associated with the work product that you're giving me? And that kind of comes down to trying to skirt some of the rules and things that the IRS commands of one, you guys, but then two, us as professionals. The IRS basically isn't letting us do what we want to do or in terms of the wild, wild west. They have rules for us and they have things that we need to provide you guys as clients. And so staff, interns, all that stuff isn't necessarily accountable or isn't accountable. It's the people who oversee them that are accountable for their work product. So if you don't see their names on it, it's totally fine. All right. The thing everyone's been waiting for. This is why I put it at the end. That way you have to suffer through me sitting here.
Yes.
Tax strategies, right? And these are very high level things that are common that we see that are ethically founded strategies that are meant to get you some of those tax savings. The first one is depreciation, right? We hear a lot about people talking about depreciation and not understanding what it is. Basically, depreciation is the way to write off a large asset, is what it is. It's like you're taking small chunks over multiple years. And then there are some accelerated methods, like you see here, bonus depreciation in Section 179. Without getting into the details of them, bonus, you can get 80%, or if you go Section 179 of the total cost of value. So if you buy something for $100,000, you get $80,000 of a deduction. Or if you do Section 179, you get 100%, but there are limitations there. So this would definitely be a situation. This is where you don't have to make the decision of how much to take until the return's done. So if you buy a new vehicle, things of that nature, you have time to kind of plan out, figure out where your income lies, how much depreciation do you want to take, how much do you want to leave on the table for next year, that type of thing. You can play that game.
So talking about that Tiffany ring, what exactly can be depreciated?
So the rules are anything above, any piece of equipment above $2,500 is required to be capitalized and depreciated. So if you're talking like if you're buying paper, right? If you're maybe you're a printing company and you buy a ton of paper and it's over $2,500, that doesn't count. But if you buy a printer that's $5,000, that counts. And so these things should be capitalized and depreciated, which basically means that you don't take the full deduction unless you do Section 179 in that first year. And so that's really the difference between depreciating versus writing off.
Okay, and it's only for equipment.
Yep, equipment. There's a lot of other type of assets out there, but you're getting into some very niche territory when you're talking like trademarks and patents and stuff like that. Okay. But the biggest thing is furniture, equipment, computers, that type of thing are the kind of three big ticket items that you see of where a lot of people spend their money at year end trying to save some taxes.
10 days. I'm on this. So does it have to be new equipment, or can I go secondhand and get it used and still write off what I paid?
Yes, absolutely. So the rules did change back in 2017, where before you couldn't, if it was used, you couldn't take advantage of some of that accelerated depreciation. You had to depreciate it over its life, which is normally like 5 years, 7 years, depending on what it is. But in 2017, they changed the laws so that you could take advantage of it for a used thing. And that mainly happened with cars, right? When you're going to buy a lightly used car, that was where we saw the best outcome for it.
So if I went out and bought this car in the next 10 days, then I could go ahead and say, okay, I can either do the bonus depreciation or the Section 179, depending on the limitations.
Yep. And so if you want the biggest bang for your buck, right, go for an SUV, because the rules are that the vehicle itself, if you have a pen and paper, you'll want to write this down. The vehicle itself, gross vehicle weight, has to be over 6,000 pounds in order to take the largest amount of the deduction. If it's 5,999 pounds, you have a limitation that you're applied to. If it's 6,001 pounds, you have no limitation in terms of the total depreciation that you can take in that first year when you're talking Section 179 or the 80% of bonus. So you're talking some big dollars when you buy a, let's say a $50,000 vehicle, right? If it's below 6,000, you're limited to, I think it's like 18,000 of a deduction in the first year, versus if you had it above 6,000, now you got a $50,000 deduction.
Folks, you just heard it here, right now. These are the tips and tricks to get your taxes reduced and strategies. But I think it goes back. That's for the car. But overall, there are methods to be able to take equipment, and we're only talking equipment, not for office supplies, things of that nature. And more importantly, the value of it has to be over $2,500.
Yep. Yep. If you buy a computer for $500, we don't care about it. You can expense that fully in the first year. You don't have to worry about it. Cost segregation study. So this is a little niche, but maybe there's someone in here who owns commercial real estate and they don't know. So when you're talking commercial real estate, that's an office building or a warehouse or something along that line where you're not able to live in it, right? So what a cost segregation study is, to give the quick and dirty of it, you basically go in and break out those smaller depreciable assets, right? And then you can start Section 179ing those and taking bonus depreciation on those. Whereas if you do the building itself, that is not eligible for Section 179 or bonus depreciation. So you're just taking chunks out of a bigger pie and accelerating that depreciation expense, therefore getting more of a deduction as compared to if you just let it go for its life, which is 40 years, right? I might not even be here in 40 years. So if I want my deductions now, and that's what a cost segregation study can do for you. Pass-through entity tax. This is something that has caught in wildfire in Nebraska. There's a lot of news around it because it got passed kind of late summer, and so basically, which we could spend a whole thing talking about pass-through entity tax, but basically, if you have a pass-through entity like a 1065 partnership or an 1120S, like we talked about, having those allows you to pay tax at the entity level rather than the individual level. So if you have a very successful business, a very successful pass-through business, this is something to be aware of and to plan for, because of the fact that your personal taxes payments are limited to $10,000. So if you have a business that does really well and you're paying in $10,000 doesn't cover even your real estate taxes, right? Like you're paying $15,000 in real estate taxes because you have a really nice house. That is an planning opportunity to pay at the business level, get a credit on your personal, and kind of get some refund action going.
So I think I'm a little lost on the pass-through entity tax, and
Trust me, I am too.
I know this could be a full-on another power hour. Which, just so you know, we're coming back next year, full-fledged, 12 months, another power hour. So we're going to have you back. But
subscribe.
As a pass-through business, I think what you're telling me is you're getting taxed at a certain level for the corporation or the business. And
yes.
And your personal may not be able to, you're not
taking full advantage of what you're paying for. Basically, you're kind of getting cheated in a way.
And cheated because you are paying more in a given area, such as real estate, than what you should be paying. You're
paying for something, right? But you're not getting a deduction for it. So if we go back to kind of our analogy back with depreciation, we're talking office supplies, right? If I pay for $500 worth of office supplies, right, and as a business, I should be able to get a $500 deduction, right? And so that's as a business. So then as a personal, you should say, well, if I pay the state of Nebraska $500 of taxes, I should get a $500 deduction. And so the IRS says yes, up until you get to $10,000, and then anything above that is just disappears, basically. So what this does is, or the way that this is beneficial, is because the business says, hey, I'm going to pay your taxes on your behalf, because now it becomes a business expense. And like we said, I pay this tax, I get the deduction for it, and then you get a credit for it. So it's kind of a win-win situation for both me as the owner and the business as an entity.
So basically what I'm hearing is my business should pay my taxes, so that way I cover beyond the $10,000 range.
Yep. And that's for Nebraska. A lot of other states, there's about 35 states now that offer a similar variation of this. So if you're not in Nebraska, definitely check and see if your state has something like this. It's definitely going to be a powerful planning tool for the next couple of years. And so one other thing, which is confusing a lot of people, is the fact that Nebraska does do a retroactive piece, which I don't want to get into the details because obviously I want to leave time for questions and things of that nature. But basically, Nebraska says, hey, what was your income for 2018 through 2022? Okay, we'll calculate the tax. If you pay that, now your business gets a large deduction. We'll give you a large credit, and now you're kind of getting into that same mutually beneficial situation where now you're getting a large credit, which should result in a large refund, and then you're getting a large business deduction, which helps bring down your overall income from a federal IRS perspective. Following?
I'm gonna have to repeat that again because I think I'm with you, but I want to be 100% sure.
Yeah. So basically, the state of Nebraska says, what were your incomes for 2018 through 2022, right? Mm-hmm. What was this income for this window? Let's say you made $1 million in terms of total taxable profit. So Nebraska says, okay, we'll take the rate is 6.84%, which I'm not going to try to do that math in my head right now. But yeah, wait, did I say 1 million or 5 million?
You said 1 million.
Oh, okay. That math was easy then. I thought I usually go with 5. But so then Nebraska says, okay, if you pay us this amount, we will give you a credit. You can take a business deduction for that amount that you paid because now it's a business expense. And then this credit on you, it personally isn't taxable. So now you're kind of getting into that flow of taking a deduction over here, but not having to recognize income over here. So that's where it becomes super powerful.
Okay, and that's solely Nebraska.
Solely Nebraska for the retroactive piece.
Okay.
For other states have some retroactive stuff, but Nebraska is the farthest back that I've seen, going back all the way to 2018.
So that's 5 years?
Mm-hmm. Yep.
Not bad.
Yep. Especially if you had some really profitable years back then.
I mean, if you survived COVID, man, God bless you.
R&D studies. Basically, if you spend a lot of time researching and developing new products, new services, things of that nature, there is a tax credit out there for you. However, you can't just say, oh, I have R&D. Where's my tax credit? Like a company has to come out and look at your books and calculate this for you in order to make sure everything's above board and that you are eligible for this credit or that these expenses are truly R&D.
So what type of company would come out and do that kind of study? Would that be like a Bland Associates kind of company?
No, there are specialized companies. So I'll shout them out because they are a client of ours. We love working with them. A lot of our clients use them. Scarpello Consulting is one that we use a lot. Another one is Cedar Robinson at Warner Robinson. Love that guy. But basically, yeah, these companies specialize in tax credits, right? So when you're talking cost segregation studies or R&D stuff or some more employer-related payroll tax credits that are out there that are kind of niche, they specialize. They live and breathe these things just the way that I do tax. So they come out and they specialize and they know the ins and outs and the loopholes and things like that to take advantage of.
Okay. Nice shout out. Then, by the way, they should join the chamber.
Yeah, I'll get on them. All right. So here's your to-do list, right? When you leave this call, like we said, make sure your books are organized, clean, caught up through November. Then you can, take the holidays, spend time with your family. And then in January, you can catch it up with December's information. As well as, if you have any planned travels and you already have an accountant that's going to be doing your tax return, make sure to let them know. That way they know when you're going to be unavailable if they need something, right? Because obviously people want to travel. People don't want to be in Nebraska in January. I don't, but but I be here. In January, that's when you're going to start getting those documents like we talked about, where things are starting to get mailed to you. So that's when you want to start taking those documents, putting them over to the side, making sure they're sitting there ready for you. That way, whenever it's time to bring them in, you already have them right there for you. These other two steps are kind of a courtesy that I would love to see people do, but unfortunately, not a lot of people do it, or they don't have the time to do it. But looking at your documents last year of like, oh, I'm missing this, I know I'm going to be receiving this, having that kind of information as an accountant just makes my life easier. And then February and April, there's going to be a few more documents, but it's really going to come down to working with your accountant, getting your stuff signed, paid for, and filed. So that's really all I got. See you guys later.
And right on time, because we are at the hour mark, and I really appreciate the information that you've imparted on us tonight.
Yeah.
Especially as we're preparing for 2024. I think there's no success without the preparation, and part of the battle is knowing what to prepare for, and doing your taxes and minimizing your tax liability and having a sound tax strategy starts this year off as it should.
Yep.
And if you, I guess the question for me is, if somebody was looking to get a hold of you, how would they do so?
Our website really has a has a submission form where if you wanted to reach out and get put with someone on our team, or just kind of contact me directly. My email is dbillups@blandcpa.com. I can put that in the chat. Actually, we'll see. Oops. I don't know if I can.
Well, you got to sign in as one. Did you put it in there?
Yeah. No, but I will let Shay do it or disseminate it. However, dbillups@blandcpa.com. Hey, look, it's our website.
Hey, look at this.
Yeah. So if you scroll down,
technology, right? So on this website, you can find more information about you and how to get a hold of you in order to, have that conversation. But knowing your calendar, you can try to get in early January, but you're about to ramp up, and it's about to be full on taxes.
Yeah, I'm telling my wife and my family that I love them, that I'll see them at April 15th. That I'm going to war. So
strap in. So, but this is the opportunity to get a hold of Bland Associates. But you're not. I mean, obviously, your group is not the only ones out there. It's just important to get somebody that you can work with and you can have a relationship with. Any last thoughts, Matt?
No, other than thank you very much for having us on, Shay. And thank you, DeVon, for keeping. Normally when somebody says tax and talks about it for 40 minutes, I turn into a screensaver mode. But that was great information. My wife's a solar practitioner herself. That pass-through entity tax is applicable for us. And I learned something on this call as well. So thank you, DeVon.
Absolutely. And DeVon, last final words.
If you bring a shoebox on April, that's fine. It's been great, talking to you guys. I mean, hopefully, if you guys have any questions, you can reach out to me, contact me. More than happy to help. But yeah, it all comes down to finding an accountant that you have a relationship with, or that you want to have a relationship with, that you mesh well with personality wise, just because of the fact that it is a highly stressful situation, and tax season isn't going to get any longer. So having someone you can feel like you're in the trenches with, and that supports you, and that is going to be by your side, is the utmost importance in this industry.
And with that, thank you both so very much for ending our 2023 Power Hour. This has been a wonderful opportunity to get social capital in the aspect of accounting, tax preparation as we enter the new year. I wholeheartedly thank every last one of our guests who've had the opportunity to come on and share with us this year of how to grow and scale our businesses, how to be better entrepreneurs. and have partnered with the MAC, the chamber, in order to meet that mission of empowerment, connection, and championing. This is my farewell for the purposes of being on the board of the chamber. It's been one heck of a ride for the last 2 years and seeing the chamber grow and scale. But there's much more to come. And unfortunately, you have not lost me for Power Hour. So I will be back next year, full-fledged. We're going to open this up with more guests, more speakers, more social capital being parted on to our members. But until then, stay well, stay safe. God bless. Come join our tribe. Thank you all.